At the bottom of the dashboard, you will see a calculation of the operational investment in the business. Our calculation of operational investment utilizes the DuPont mechanism for recasting the balance sheet from a traditional balance sheet to an operational balance sheet. The DuPont mechanism was defined some 90 years ago by chemical engineers who, when given an income statement and a balance sheet by the accounting staff, found it relatively easy to interpret the income statement, but the balance sheet proved to be challenging. So they asked the accountants to explain in plain English what the components of the balance sheet meant. The traditional balance sheet is a very numerical document. Assets or things we own, the pluses; liabilities or things that we owe, the negatives; and owner's equity being the difference. But as the accountants went through each component of the balance sheet, the engineers started to see a functional picture. They started to identify that each component in the balance sheet was either a component that funded the business or a component that operated the business. The funding can be simplified by saying that there are only two sources of funding: your own money or somebody else's money. Your own money is traditionally referred to as equity. Other people's money is traditionally referred to as debt. And the sum of those is what is referred to as the investment in the business, or what I anecdotally refer to as the pot of gold. Now, when you move all of those components of the balance sheet to one side, what are you left with? And the answer is predominantly four key operational components: accounts receivable, inventory, accounts payable, and fixed assets. The balance sheet still balances, but by expressing it this way, it's easier to understand and more informative. Let's look at the same concept numerically, and let's bring up a traditional balance sheet and then go through that balance sheet and put either an F or an O for funding or operating next to each line item. Now, if there's ever going to be any confusion in how the DuPont system recasts the balance sheet, it will come down to cash, which is treated as negative debt. It is treated as an offset to a debt balance. Once we have done our allocation, we can simply draw together the funding components and total them. And to ensure that the balance sheet still balances, draw together the operational components and total them. The DuPont balance sheet is easier to understand, and it answers a number of key questions. How much is invested in the business? In this instance, $795,000. Where did the funding come from? How much of it came from debt? How much of it came from equity? And most importantly, from an operational perspective, what are the operational team using that funding for to operate the business? And in this case, the major investments are receivable, inventory, fixed assets, and payables.